Hello guys and welcome to today's video. In today's video I'm going to be telling you exactly how many shares you need to have invested in the S&P 500 index in order to retire in either 2030 or in 2040. Most people, well, they're going to follow the traditional route and they're going to work 9 to 5 for 40 years with the hope that they one day can retire. But let's be honest here, no one wants to work for 40 years and then retire. But in order to have that financial freedom to quit your job, travel when you want to, start a business, spend more time with your family and not have to worry about money all the time, and just be happy every day. In order to have that, well, then you need to achieve financial independency. Financial independency is a big goal of mine, and there are many ways of reaching it through investing. But some ways are more risky than others. Going all in on a single stock can be extremely risky. It can generate you a lot of money, but you also have the risk of losing your whole investment. And that is exactly why I like to invest into index funds. Investing into index funds is super easy and it is less risky, because when you invest into an index, well, then you become a small stock owner in every single company that there is within this index. So for example, when I'm investing into the S&P 500 index, well, then I actually become a small stock owner in every single company that there is within the S&P 500 index. And the S&P 500 index, well, that does of course include the 500 largest companies within the US. In today's video, I'm going to answer the question of how much you actually need to have invested in the S&P 500 index in order to retire in either 2030 or 2040. So if retiring early is something that you would actually like, well, then I would highly recommend you to watch today's video. Without wasting any more time, I'm now going to jump into Excel and show you the actual calculations behind how much you need to have invested in the S&P 500 index in order to retire in either 2030 or 2040. In order to figure out how many shares we need, well, then we need an estimate of how much we are actually spending. According to the Bureau of Labor Statistics, well, then the average spending per household in America is $5,111, and that equals $61,332 per year. This number is of course only an estimate, and it might therefore not be completely true for everyone, as everyone has different lifestyles and different spendings and so on. I have included an example where I have a person who is spending 20% less and an example where I have a person who is spending 20% more, just for you to see how much of a difference it actually means to either spend less than the average person or spend more than the average person. Another assumption that I'm making is that the average inflation is around 4%. We usually say that the inflation should be somewhere around 2%. However, with everything going on right now, I have decided to set the inflation at 4%. When you adjust the spending per year for inflation, well, then you basically get a yearly spending of $83,937 per year. And that means that we, until 2030, have a total expense of $671,497. So now we can actually calculate the cost for a given amount of years of retirement. In this example here, I'm using 25 years of retirement. The average length of retirement is 18 years. However, since I want to retire a little bit earlier, I have decided to use 25 years. But don't worry, because the amount that you see here is not actually what you need to have invested. And that is due to the power of investing, which I will talk about a bit later in the video. So don't worry when you see this number here. For the average person, well, then there is a cost for 25 years of retirement of $2,098,427. A really important factor now is the growth rate of our investment after we have retired. For calculating this number, I have used the average return for the S&P 500 index for the last 40 years adjusted for inflation. And that number is slightly above 8%. Therefore, I've decided to use 8% as the annual growth rate of this investment here. In order to actually calculate what we need to have invested by 2030 in order to spend 25 years in retirement, I'm using this simple retirement calculator here. And here we see that if we have $1,060,000 saved up and invested, well, then we basically can spend 25 years in retirement. And down here we do see the balance of our investment. We see that it's going down over the years, and once it reaches 25 years, well, then your investment is basically gone. So the results here is that you actually need $1,060,000 in order to spend 25 years in retirement from 2030. If these numbers seem high to you, well, then don't worry, because you're not the only one. And for that reason, I've decided to make the exact same calculations, but only in this example here, we are retiring in 2040 and not in 2030. And these numbers here are much more achievable. Again, we are using the exact same monthly expense here of $5,111. However, this time we are using an inflation of 3% instead of 4%. And that is because we now have a longer time period. At the same time, we now have to adjust for inflation from now and until 2040 instead of until 2030. And that is why this number here is slightly higher than in the example before. So basically in this example here, well, then you get an average spending per year of $100,414. And that adds up to a total cost for 25 years of retirement of $2,610,341. And again, I'm using the exact same growth rate here of 8%. So when we enter the new information into the retirement calculator, but then we basically see that we now need to have $1,310,000 invested by 2040 in order to retire for 25 years. And down here we again do see how the balance of our investment is changing over time. And by the time we reach 25 years, well, then our investment is basically gone. There's actually another large difference between what you need invested to retire in 2040 and 2030. And that makes retiring in 2040 much more achievable for the majority of us. And now for the interesting part. This is the part where I actually calculate the amount of shares that you need to retire in 2030 or 2040. In order to figure out how many shares we need, then we first need to set a growth rate for our investment. And I've basically set up 3 different examples. One where I have 6%, one where I have 8%, and one where I have 12% as a growth rate. It is extremely important to have different scenarios because the future market conditions, well, they can be very different from the historical averages. In this Excel sheet here, you basically see that the index fund that I'm investing into, well, they today have an outstanding amount of shares of 980 million. And these shares, well, they today have a market value of $457 billion. You see the amount of shares changing here because this index fund is issuing around 2% of new shares every single year. So the growth rate of the shares here is roughly 2%, and that is continuing. The reason why you see the amount of shares changing here is because this index fund, they're basically issuing 2% new shares every single year. So the growth rate of the shares here is roughly 2%. And in this column here, well, then you basically see how the market value of these shares changes if the growth rate is 6%. And here you see how the market value changes if it's 8%. And here you of course see how it changes if it is 12%. But now let's go over each of these scenarios and figure out the amount of shares that you need to have invested. So the amount invested here is $1,060,000. That is the same number as I showed you just before. And the market value today of the S&P 500 index, well, that is roughly $457 billion. If we assume that the S&P 500 index is growing by 6%, well, then we basically get a total market value in 2030 of $688 billion. If we assume there is an 8% growth rate, well, then we basically have a total market value of $784 billion. And lastly, if we assume that there is a 12% growth rate, well, then the market value is basically going to be $1 trillion of this ETF here. In order to find the share price here, I've then divided this number here by the amount of outstanding shares that this index fund has. And that gives me, in the 6% growth rate scenario, a share price of $611. In the 8% scenario, well, then I basically get a share price of $697. And lastly, in the 12% scenario, I basically get a share price of $898. And now for the total amount of shares for retirement. In the 6% growth scenario, well, then you basically need 1,733 shares in order to retire. In the 8% scenario, well, then you basically need 1,521 shares in order to retire. And lastly, in the 12% growth scenario, well, there you need 1,178 shares in order to retire. And here you see the total cost for retiring in 2030 if you had to pay for these shares today. And in the 6% scenario, well, then this is $688,000. And in the 8% growth rate scenario, well, then you basically need $603,000 in order to retire. And lastly, in the 12% growth rate scenario, well, there you only need $478,000 in order to retire today. And again, these numbers here, well, they might look a bit intimidating and very unachievable for some of you. And that is exactly why I have included the same calculations again, but only for 2040, just as I did before. Here we have the exact same example as before, but only using the numbers from 2040 instead of 2030. And here you basically see that in the 6% growth rate scenario, well then we need 1,458 shares to retire. And in the 8% growth rate scenario, well then we need 1,061 shares to retire. And lastly, in the 12% growth rate scenario, well then we only need And lastly, in the 12% growth rate scenario, well then we only need 572 shares in order to retire. And the total cost of these shares today is $578,000 for the 6% growth rate scenario. And for the 8% growth rate scenario, well then you need $421,000 today. And lastly, for the 12% growth rate scenario, well there you need $227,000 today. As you can see here, well then the numbers here are very different from the numbers up here. So it does make a massive difference if you actually have 10 more years to save up for retiring. And lastly, just as I promised, well then I also have the numbers if you are the type of person who spends 20% less than the average person. And these are the numbers over here. And I also have the numbers if you spend 20% more than the average person. And these are the numbers over here. So here you can basically pause the video and you can check for yourself just how much of a difference it actually means to spend less than the average person. But you can also see how much it potentially can hurt yourself in the future if you are the type of person who likes to spend a lot of money every single month. Because over time, this money does add up and it does become a really significant effect. But this is the exact amount of shares that you need to retire in either 2030 or 2040. And that was all I had in today's video. I really hope that you liked today's video. If you did, then please press the like button below the video and subscribe to my channel if you want to see more videos like this one in the future. See you in the next one.